And there it is, the closing bell at the New York Stock Exchange as we hit 4 p.m. here on the East Coast. Let's take a look at where the numbers land and settle. And as you see, it was a day of pullback. The Dow there dropping more than 340 points, down a full percentage point. The S&P 500 and NASDAQ also ended the day in the red. The S&P was down about 1.5%, and the NASDAQ is down nearly 2% today. So what does this all mean? Uma Moriarty joins us now. She's a senior investment strategist at CenterSquare Investment Management. Uma, what's your view? There's many different things and new data points that play into the market on any given day. But in your view, what's driving this downward trend today?
Great to be back. A big part of what's really driving the market today is some of the results that we saw from First Republic specifically, which I think is really bringing the investors back into the mindset of, is there an issue with the banking crisis that we saw in March? You know, First Republic came out, reported earnings indicating that their deposits were down 40%. This is on the back of some infusion of cash from other banks into First Republic in March. And so I think that's really what worried a lot of the investors today and has been driving some of this market reaction.
And the key question that you're getting into there, Uma, is this just unique to First Republic? I understand that there are reports now of a rescue plan for this bank where they're considering $50 to $100 billion worth of asset sales, which include long-dated mortgages and securities. And so the natural follow-up to that is, does it seem as if this is just this bank, or might there be more concern? Apparently the market seems to feel as if it may be the latter.
You know, we heard from a lot of the bigger banks from an earnings perspective at the beginning of earnings season. So it's been a while since then. And a lot of the results from those banks seems to be still pretty strong, right? So this doesn't seem like it's really a systemic type of an issue, very much so concentrated in very specific instances where you saw potentially an asset liability mismatch or other issues as it relates to concentration in different types of sectors and things like that. And so it doesn't seem like this is really a broad-based issue. I mean, if you look at some of the earnings reports and reactions from others across the marketplace, we've seen a lot of resiliency. I mean, at CenterSquare here, we focus in the real estate sector, and we've seen some really, really strong numbers out of a lot of the REITs that have reported so far from the industrial sector specifically, continuing to see strong demand for their spaces, continuing to see rent growth across their markets. And so I think as it relates to earnings, what we're seeing from companies broadly, it's really important to really dig under kind of the headlines and look through some of the data that indicates where individual sectors, individual companies really stand and where that is in the context of the broader economy today.
I'm glad you mentioned REITs. For the uninitiated, those are real estate investment trusts, and an investment in that typically pays a dividend. And because there's such a tight supply in housing, it's almost the one safe area of the market where you can expect to get a return. And on that point, new home sales rose for the fourth consecutive month in March. So what does all of that, the strength of REITs and the strength of the housing market, what does it look like from your point of view?
Yeah, great question. Across the REIT space, we have a lot of different areas that have great secular demand drivers. So I mentioned industrial REITs. That's an example of a place where you're seeing demand come through because of the supply chains that we're completely retooling globally, because of the growth in e-commerce. Those are things that are driving demand for industrial REITs. Other places we're seeing demand, you know, healthcare, as we see an aging population, really strong. Even from a retail perspective, you know, you've seen some of the headlines out there from retailers that are troubled, but retail real estate today is still in a really strong place. We're looking at retail real estate not only across the REIT space, but also across our private equity platform, where we have a really strong retail portfolio, where we're seeing great demand from people that really want to grow their footprint. I mean, you've seen headlines from folks like IKEA where they want to expand their retail footprint. So I think there's a lot of unique issues that are happening across the board. From a housing market perspective, I think what you're really seeing is the fact that you're finally getting to a point where consumers are effectively coming to terms with where mortgage rates are standing today. And you've seen an uptick in this housing market in a big way from the home developers, right? So new home sales, really where you're seeing the bulk of the activity really start to ramp back up. The issue from existing home sales is that so many consumers today who have mortgages already have mortgages that are at much lower rates than the existing mortgage rates you're getting today on a new home. So they're not letting go of their existing homes at those low mortgages. And so we're not really seeing a lot of movement on that existing home sale market, but new homes are really rapidly rising as you're seeing a lot of demand come through for the home builders.
I think that's really interesting. Uma Moriarty, we appreciate you coming back. It's always great to have you, and highlighting a kind of an optimistic green area of the economy in REITs and real estate amid what has been a red day on Wall Street. Great to see you. Thanks for being here.
Thanks for having me.